This month, Madhabi Puri Buch will have completed 1.5 years, that is half of her 3-year term as chairman of the Securities and Exchange Board of India. We shall be wishing that she gets a longer term, and we shall explain why. Both her predecessors, Mr. UK Sinha and Mr. Ajay Tyagi, have had a 6-year and a 5-year term. That means since 2011, India has had a long continuity at its market regulator. These mean a lot. Next door, at the Reserve Bank of India, Governor Shaktikanta Das is in the middle of his 6-year term. Long terms mean a lot for confidence in the market. Companies, good, bad or ugly, must learn to live with the continuity of the regulators. It's not important that the regulator is a technical wizard, but it's important that the regulators have the confidence of the government to be there for a very long time. That is what builds confidence in the markets, in the economy and everything around. And that is what we shall be exploring in this edition of On Point. So confidence in the market takes time to build. Look at what's happened to China this year. In July this year, they have changed the governor of the Central Bank of China. That's not all. What they've done, they have also changed the equation between the central bank, the National Financial Regulatory Agency. They have changed a couple of other things. Are you surprised that these changes are happening at the same time when there is a distinct lack of confidence in the Chinese markets? This is an important thing to remember, and we shall be coming to it repeatedly. Look at something else. In RBI, Governor Shaktikanta Das has had a long term in which of about 6 years he is continuing. But just before that, there was a kerfuffle when Urjit Patel decided to change how the banks report NPA, but didn't really work out because he himself was moved out. That is the context in which we look at what's happened to Sebi. But before Ms. Buch has arrived at Sebi, let's look at what has happened to Sebi in the past decade. Let's start with Mr. UK Sinha. Mr. UK Sinha came to Sebi in 2011. As soon as he came in, he started repairing the mutual fund industry. Now, this is an interesting thing. Before becoming chairman of Sebi, Mr. Sinha was the chairman of the Association of Mutual Funds of India by being the chairman of UTI. And yet, despite there being a possible suggestion of conflict of interest, he moved ahead to make the mutual fund industry better. The mutual fund industry reacted. From a growth of just 1% in the year 2011 calendar year, by next year the growth of the industry, that's assets under management, was 15%. This was a sharp rise. There are several things that he brought in: advertising, freedom, removal of entry load, so on and so forth. And then he moved into the IPO market, cutting out those infamous first day gains. Also, he waged a big battle with Sahara. These helped, but basically because he was there for a long term. Let's move on to his successor, Mr. Ajay Tyagi. Mr. Tyagi came in when the demonetization had just run its course in the Indian economy. Within a month, Mr. Tyagi took on an alleged insider trading case of Reliance Industries and awarded a penalty. Now, these are interesting things because when this case had been maturing for 9 years, but he had the confidence, the system had the confidence that he will wage this battle. Next year, he awarded a 2-year ban on PricewaterhouseCoopers for its involvement in the Satyam case. All of these have major implications for the market. His finest hour, however, and that was again a reflection of the fact that there was continuity, was when COVID struck. All the markets in the world had a very difficult question to ask. Can they function in that atmosphere? The Indian markets functioned. They didn't stop even for a day. As a result, capital raising from the markets was not affected. There was no turbulence there. This was all made possible again, and I'm very clear on this, by the sense of continuity that prevailed. These took time to develop. What has Ms. Buch brought to the market? Unlike Mr. Sinha or Mr. Tyagi, when they had to make people believe in the power of the capital markets, this chairman has to deal with something opposite, exuberance. The exuberance of returns, which has to be matched with the sanity of the risk returns trade-off. And in this, she has been moving very emphatically. How? Just look at this.
Very often, the side of Sebi that is seen is what we do in order to tighten what and where and how the markets function. The purpose behind that is actually simple. That a capital market that doesn't have trust at its core, whether it is the retail investor, whether it is the foreign institutional investor, whether it is corporates themselves who want to come in and raise capital, unless there is trust, the entire edifice will fail. Trust is the very foundation on which the superstructure has to be built.
It means keeping both the equity and the debt markets interesting for sellers and buyers, but without the implication of cheating. This is a commitment which she has brought in. Now, Sebi has always underlined its role as promotion of capital markets, as she just said, regulation and protection of investor interest. She has drawn the lines clearly linking those. Anything which misguides the investors, she has decided that she will nix those. And she has been remarkably candid about these, writing in the Sebi annual report that identification of misconduct cases which otherwise would have missed the human eye has been one of her key priorities.
Algo players will claim 300% return per annum. Use my algo. I mean, you really think Sebi is so dumb?
Right from January this year, when the Hindenburg report was released about the Adanis, there have been commentaries on whether the regulator has been on the ball. The Sebi report filed with the Supreme Court has drawn some flack, but her insistence on making Sebi responsible for large capital formation to happen in the market has drawn a heads up. You can see it from the domestic investors' response, you can see from the consistent foreign investors' response. So, what is the market saying? The market saying committee reports are fine, but they want to look at something beyond. What is the beyond? Whether there is continuity in the top job. As of now, continuing with the tradition set for the last decade, she has been able to assure investors that the markets would hold up without cheating, and that is a very strong commitment coming from there. And that's all from this edition of On Point.